So he wasn't really sitting there, in my opinion, saying, sign me up for more taxes. What he was saying was stop the nonsense. Stop the nonsense. Get to some solution, because at the end of the day, we need to reduce deficit, right? And there's two ways you can go about it. You know, and we probably, in some instances, may have to increase some revenues, hopefully not a lot. And undoubtedly, we need to reduce spending, right? Those are the two things. And he's saying, get it done quickly, get it out of the way. You know, if you were capable of looking at your skin one day and saying, hey, you know what, right there, in 15 years, I got sunburn when I was a kid, I'm going to get a little, you know, spot of skin cancer there. What would you do if you had that ability to see that? Slice it right off, put a little Neosporin on it, put a Band-Aid on, go about my business, right? That's what we're talking about here. The sooner we can get about that, the better, because then you can start seeing a path for light at the end of the tunnel. Because as Randy said, where are we sitting from a fundamental place for our corporations in America? What did they do when the economic crisis happened? What was the first thing they did? Laid off a bunch of folks, which did what to their expenses? They looked for every place to reduce costs. I've worked in corporate America. That's the big thing. Efficiency. Technology improvements, everything more efficient, more efficient, more efficient, right? It creates the social problem of unemployment, and that's what everybody's talking about, unemployment, unemployment. Does it matter that we have 10% unemployment? If you're one of the 10%, it matters a lot. It matters a lot. But if you're not, does it matter? No, it's a social problem. It's a socially responsible problem. We don't want 10% unemployment, right? Socially, we don't. But economically, for the corporation, does it matter for their earnings? Not really, right? So what we have is we have a very lean and mean corporate machine in America. As Randy pointed out, largest cash reserves that we've seen in history in many of these corporations. But what are they doing with their cash? Sitting on it. Why are they sitting on it? Why are they not hiring more people? Why aren't they listening to the president's thing? We need to hire more people. Why are they not doing that? Uncertainty. And the second that you remove the uncertainty, right, and they can create a corporate strategy, because what does every one of these corporations want to do? They want to grow. They want to grow their earnings. They want to grow their market share. They want to grow their profitability, right? And how do they do that? By investing wisely and earning a return on their investments rather than sitting on it, right? Because what are they yielding when they're sitting on it? What are you yielding on your cash position? Not a heck of a lot, right? Nothing even Randy can do about that. Just is what it is. He can't change interest rates. You can do a lot of things, but not that. So that's the situation that we're sitting in. So I guess what I'm saying here is behavioral finance is kind of kicking around with investors, and it's going to be going on with the market as we see what's coming out of Washington. And if we have a back and forth continuation and developments and media sensationalism about the lack of agreements and the back and forth, what's going to happen to the market over the next 12 to 18 months before we get clarity? It's going to bounce around. We're going to see things like happened last week, you know, where we seize on some piece of data, you know, or some rating agency says something, which they might well do if we don't get, you know, some certainty coming along here. But if the fundamentals don't change, if the fundamentals remain roughly where they are with large cash, healthy balance sheets, and the ability to grow, what does that mean from a behavioral finance perspective when we see those vacillations? Everybody remember back to 2008? All right, market went down to what, 6,800? How are you feeling then? That one we were not feeling good about, right? We might have been there, done that now, I hope. But back then, I know I was sitting there being like, good Lord. You know, but what, from a behavioral finance perspective, should we be doing? If the fundamentals haven't changed, those are opportunities. And I think the takeaway that I want to get across, if there's one thing that you take away from this, is as we go through this kabuki dance that we're going through, you know, where we have to get some clarity, we have to get some deficit reduction. If this group of 12 cannot get it, there are some built-in automatic mechanisms that are going to kick in that will reduce spending. Done, part of the deal, right? But what kind of a vote of confidence will we get for our legislative process? That'll be a no vote of confidence, right? But as we start to get some clarity around this situation, if we actually see it, what do we expect going forward? Based on the fundamentals, a pretty positive. So I guess from my perspective, invoking Professor Bernarzi, I would submit to you that you're going to have some of this bouncing around in volatility like we saw last week. You're probably going to have that until we get some clarity. I don't know how you feel about the probability of clarity coming quickly and swiftly. I think it might take a while, unfortunately. I hope that it, zips right along, but given the posturing that we're seeing, I'm not the most optimistic. I think folks like Warren Buffett, the immediate reaction that you got from the Republicans was, he doesn't know what he's talking about in this. And then the Democrats were patting him on the back saying, great job. He wasn't saying that to either of them. He was saying, both of you guys, get your act together. Clean this up so my company and all the others can have some certainty so we can move forward as a nation and go where we want to go. But I think in the interim, we're probably going to have a period of time where that doesn't happen so swiftly. And as that doesn't happen, it's going to create opportunities. Gentleman in the back. When's our election coming up? Now the first thing is that we have here is we have a period of time up until right before Thanksgiving where this group of 12 needs to come up with a plan that's passable, right? And the rest of the Congress essentially has given up their voting rights here. So if we put together this plan on or before November and it's serious and it might include some revenue increases, it might not, it certainly will include some things that we don't like, right? Anybody here want to be able to look and know where they're going to get skin cancer? No, not pleasant. But I'd rather know now and be able to nick it out, right? So that's the analogy that I try to use here. So my guess is the earliest is sometime in November. If not, then we could have, some more of what we had last week, right? But we certainly are going to have something in place in time, if not before, soon thereafter election time, right? Because the global economy is looking at us very closely right now. It's been laid out what we're going to do. And again, I don't know what your bias is in the political spectrum, what you favor and what you don't favor. But the one positive thing that I would tell you, whether you like them or not, that I believe the folks from the Tea Party have done, is what have they done? They've focused on this problem. 5 years ago, were we talking about how much the government is spending? Did anybody know what the government was spending? Wasn't one of our focuses. Right now, do we have a pretty good idea what they're spending? Do we have a pretty good idea that we want to reduce what they're spending? And we want to deal with this deficit issue? We got S&P telling us we need to do it, right? And we have other governments who own our debt telling us we need to do this. So the positive thing that I take about this is we're having the right conversation. It's not a pleasant conversation, right? It's not a happy conversation, but it's the right conversation. And like other crises that we've had, will prevail, because what are you going to do to your elected officials if they don't fix the situation?
Make them part of the 10%.
There you go. How many people are going to miss the next election? I'm going to schedule a vacation, be out of town. Not a hand going up in the room, my friends. Everybody's engaged in this. And we're looking and we're asking our people in Washington to produce. And if they don't produce, what's going to happen? We ain't sending them back, right? So if you ask me for the positive aspects of it, Randy laid out the economic positive aspects of it, that the fundamentals are sound. From his analysis, from Raymond James's analysis, fundamentals are sound. Behavioral finance, how are we going to do in the intermediate term, short term on that? Well, uncertainty. Rhetoric back and forth, I think we're going to bounce around. What does it mean for you when you see those sell-off days? Anybody hear the term of keep a little powder dry? All right, a little powder dry. I know I had a little powder dry that went to work last week. Didn't catch the bottom, of course, you never do. But a little powder dry could be healthy, And if the fundamentals are sound, it's going to create opportunities. Because who in the room is planning on checking out in the next 12 months? Going up to that big place in the sky, the real long-term vacation. Anybody? You look like a pretty healthy bunch, right? I know you had some sweets, but that's okay. It's just one night, you know. Pretty healthy bunch here. Whose financial plan is structured for a 12-month horizon right now in the room? None of yours, right? Whose is structured for the next 20? Whose is structured for the next 30? The next 40? I think so, sir. You look pretty damn good to me. Yes, sir. We're going out after this too, you and me. I'm being a little facetious, but I'm not really. The plan is a long-term plan. And have we been there and done this before? We have. And we're here again. It probably won't be the last time we're here. It'll be a different here, right? But it's, as Randy said, there are some very positive things to think about. The key is the fundamentals. And the second is that the American public is focused on the right questions and is asking Washington to do the necessary things. It's not going to be pleasant for all of us. We're going to have to take a little castor oil, But hopefully what it does is it clears the path for that long-term success that we all need for our retirement. Right? So how's that on behavioral finance? Did I make Shlomo Bernartzi proud? Probably.